Hello and welcome to Crux Investor. We caught up earlier today with Gianni Kovacevic, who is the CEO of CopperBank. It's an unusual and slightly unorthodox play on the copper thematic. We talked to him about how he's advancing their two core projects, what he's going to do with the rest of the portfolio, and we sort of touch upon the royalty options that he has available to him. So if you want our thoughts and opinions on the conversation, you can find that at cruxinvestor.com/club, where you can also find detailed company reports and analysis. We've got commentaries from experts from around the world on a variety of companies and commodities, including the EV thematic. We've got training courses on there to help you with your diligence process. We do summaries of all the interviews that we do just to save you some time because we know you're busy people. But most importantly of all, there's a wonderful, thriving community of investors sharing their thoughts and ideas with each other in a nice, friendly, and safe environment, free from judgment, trolling, and abuse. And if that sounds nice to you, go and join them at cruxinvestor.com/club. We'd love your feedback too, so give us a like, it'd be appreciated. Leave your thoughts below, we'll get back to everyone. And if you want to see precisely what we covered today with Gianni, do take a look in the description below. Gianni, how are you, sir?
Doing very well, Matt. It's been almost a year since we last spoke.
It has. Last May we spoke. It's been far too long. But you boys have been obviously quite busy. I think your share price was 16 cents when we last spoke. We're up to, 56 now? Not too bad.
Indeed, not bad, yeah. Just getting started, though.
Just getting started. Well, we're going to hear all about it in a second. First of all, I better start with some pleasantries, hadn't I? So where in the world are you?
I'm in Zagreb in Croatia, and I've always spent about half my time over here. And it's getting ready to open up for the tourist season. So I think it's highly probable that people can plan a vacation in this part of the world, I would think.
I'm glad to hear that because I have planned a vacation in your part of the world on a boat in August, and I'm hoping I'm allowed to go. It's beautiful down there. Absolutely stunning.
Bring your credit card. You can use it.
Yeah, I think I always have to bring my cards with me. Well, look, better not talk about holidays. I might get depressed. Why don't we kick off? Give people, in fact, give me a refresher. Give people a refresher and people new to the story an idea of what it is that you've got. But just give us a 1-minute summary if you don't mind, and I'll pick it up from there with some questions. Okay.
CopperBank is strictly focused on this copper revolution. We've got a very good share structure. It won't be too much dilution to answer some unanswered questions. We got 2 development projects, one located in Nevada, one in Arizona. 3 very exciting blue sky exploration projects, which we own, not a joint venture, and an organic built-in royalty company. With the more success we have with the portfolio, the more value that this royalty company has. So it's a one-stop shop if you want exposure to copper.
Right, perfect. Thank you very much for that. The market has changed a lot since we spoke, almost a year ago, in that copper price has come back, and it's done a lot of the heavy lifting for a lot of copper companies. But at the time, when we first spoke last year, you were setting yourselves up for success. You knew copper was going to come back, and it has. Do you attribute the share gains that you've seen in the last year to your own hard work, or has the market done all the heavy lifting for you?
Well, I'm going to plagiarize my friend Rick Rule. And this trade was always a when, not an if. Ifs are very dangerous in this game because you can't control your own outcome. It was always when. The 75% of the development projects around the world that we as an industry have brought forward the last 20 years require, according to BHP Billiton, the world's largest integrated mining company, $3.50 a pound copper. So our idea was when copper was $2.50 a pound, nothing was economic, and you could get it for pennies on the dollar that's already been spent on these things. We did the acquisitions. We very carefully looked at what are the next steps so that you can spend a little money to answer these very important unanswered questions and then present this to the market. And that's where we are now. So all the work I did on copper in general, I wrote a book on it, was published in 2016. I kind of own the moniker. What Goldman Sachs last week kind of plagiarized what I've been saying for some years, copper is the new oil. And I always compare copper price-wise, demand-wise, commodity-wise, interest-wise to oil. The future of energy is electrification, and that's the demand for copper goes up in the next sort of 20 years. So we don't have to really lose too much sleep on that anymore. And I think now it's about, as this has manifested itself, most of the economic studies for almost all the projects, the scale ends at $4 a pound copper. Copper's printing $4.30 a pound. So the last time copper was this price, Matt, you look at the value of the things that we acquired. It would have been 6 or 7 times higher market cap. So the commodity's now done its job, and there's still a big opportunity for retail investors because the shares, everyone's climbing that wall of worry, but it will get there because in the long run, as we always say, the market is a weighing machine. Short term, it's a voting machine, but in the long run, and now we're right there. So the thing that kills this is a collapse in the copper price, but I don't think we're going to see that in the coming months.
Right. Well, I think Friedman was saying nickel's the next is the new oil as well. People are jumping onto the EV thematic and understandably because of the whole industrial complex seems to be gathering around that, spending hundreds of billions of dollars to enable it, which is great, and copper is a big part of that. I get it, but here's the thing: you've set yourself up. You got on. It's a when, not if story. Totally understand that, and you've got yourself on the right train. What I would like to understand from you is, given the price of copper's come back, it's over $4, and it's been thereabouts. It's been a fantastic rise in the price the last few months. Why aren't you going and raising a ton of money? You've raised a little bit of money recently. Why aren't you going and raising a ton of money in this market to get these things going whilst the price of copper is up?
That's because we're the largest shareholders of the company. We think like investors. We did not issue any cheap warrants, and people can sympathize. They've got their portfolio, and they're probably wondering, why are some of my favorite stocks not moving? Almost all the copper juniors issued a ton of warrants. We've done none of that. We also self-finance. We have the ability to put the money in ourselves, and we've always done our raises above the market, no warrant. And we raise just enough money to do our initiatives. To be crystal clear, we own the entire portfolio on a 100% basis, and the holding costs are very low. So now that we're looking to move the portfolio forward and people are going to see a lot of news flow, we will very carefully measure and execute and spend the right amount of capital. When we believe that the value is sort of commensurate to where the assets are, where they should be. And just to give you an added guidance, the last time copper was above $4 a pound, we bought listed companies. So back in those days, 2011, the market cap would be well in excess of $200 million. So we're trading at about 45 million. We're trading at 55 cents. To repeat, last time copper was $4 a pound, that would be more than $3 a share for the things we own. Can we be there? I believe that's sort of a very plausible sort of outcome in the near term. So now that we are going to move the projects forward, it doesn't cost a lot of money to answer the unanswered questions. So we will then look at that. Unless we have a much higher share price, we'll look at doing a higher raise. But meanwhile, we'll do each phase of drilling will be financed at these share prices until we get some appreciation.
Right, but that level of caution, you could miss the boat. I'm nervous about that. Giving a little bit away now at this end to advance the projects and get them moving quicker. Surely that's a better strategy.
Matt, you have to understand the amount of money that's been spent on these projects. They invested $85 million at Copper Creek, 220,000 meters of drilling. What money should I spend right now? We are not doing a bankable feasibility study because of the location of the project in Arizona, in the Copper Corridor. Unlike so many other projects where they actually have to say where the water is going to come from, where the power is going to come from, the team, all these important things. It's in Arizona. What we need to do is drill some important holes. We're talking about 10 to 20,000 meters for now, to be able to really delineate the deposit, how it's open in every direction. Can we, conclusively show that this is a world-class copper porphyry located in the Copper Corridor with above average grades for the industry and for the area? It's not going to cost a lot of money, relatively speaking. And the same we can say in Nevada. The fortune of money has already been spent. And because we're shareholders, because we're investors, and because it's clear I'm not going to build these things, we are presenting an opportunity for a larger company. And that's why it's going to take a few $1 million to answer these important unanswered questions. And that's our focus, not about needless dilution. And we are moving the ball forward because it's about manpower and understanding and measuring very carefully what we're going to do, and not about raising $20 million today at this share price, because I simply can't allocate the cash.
Okay, so 10,000 to 20,000 meters costs what in Nevada?
You're going to be about $300 a meter, and 220,000 meters drilled already. So how long, what's already in place, how long would that take to drill, and what would that cost? Our first phase of drilling is going to be between 5,000 and 6,000 meters. And people can see that drill plan. It's on our website, part of our press release, after a lot of thought. We've looked at this. We did it in Leapfrog. The team has flipped it every other way. We're focused on near surface, higher grade to grow resources at Copper Creek. There is the highest concentration of breccia pipes anywhere in North America. If you look at some other projects, there's some in Peru and elsewhere. Of the 400, only 40 have been drill tested to date. So if you look at our drill plan, it's very obvious what we're going for. We're looking for high grade pods near surface, and we're also looking to increase the size of the actual of the resource. We have a historical resource estimate that CopperBank does not consider to be contemporary, but was done to the 43-101 standards. It was published in 2012, which is just a whisker below 1 billion tons. We've got 500 million tons measured indicated at 0.44% copper, and 480 million tons in inferred at 0.34% copper, which is about 8 billion pounds. And it's open in every direction. So the holes we're going to drill now, it just shows that the project, it's already big. Let's make it world-class.
Okay.
$50 million.
The PEAs are old, okay? They're from 2012, 2013. So is your plan to update that? Is that what you think the market needs to see? Is that what you want to show the market?
You can roughly estimate how much it costs to build a 75,000 ton a day mill in various jurisdictions. Now, of course, that's important documentation. Independent consultants do this. That's not our focus. Our focus is to show that the resource can grow in size and, more importantly, near surface. So there's three ways that we can grow the resource at Copper Creek without spending a lot of money. Number one, we can look at different cutoffs. Copper prices are now $4. The last time these studies were done, they used $2.90 a pound copper. Okay, so can we take the cutoff slightly lower? Does that increase the size? Can we add some byproduct credits that were not included last time? We're going to look at that, and of course, by the drill bit, anything that we find in these step out and just in sort of exploration holes, as you would call it, around the historical resource. It's obvious that this is going to, with success, that will add to the resource size at Copper Creek.
Right. So that's what I'm trying to get. I'm trying to understand what people should be looking forward to. I get that you're cautious with money and you want to spend it wisely to create value. But you've got these old PEAs. What I'm hearing from you, if I'm not mistaken, is you're not going to spend time and money, updating that. What you want to show is pounds in the ground for someone else to come along and do the work to work out whether they think it's economic, how they would approach it, and do the various feasibility studies. Is that the model?
That's crystal clear. We're going to do 2 phases of drilling this year, and that would lead into an updated mineral resource estimate for the first quarter of next year. And people can look at the 2012 history. It's a public document. You can use that as guidance and look at the grade, look at the size, different cutoffs, and the focus is to publish this report, this resource estimation for the first part of 2022, and then we will mark it to the investors and see where we are in the pecking order of various copper porphyries around the world. It costs approximately 4 cents to delineate a measured and indicated pound of copper in the ground. So to find something like a Copper Creek using the averages, and we spent tens of billions of dollars as an industry, so that would be about $300 million in about 10 years of time. People don't have the time. The larger companies now, you're going to see directives coming from their board of directors and from management happening right now, because they're going to get punished if they don't have growth. So they're going to go down the food chain, in my opinion, and they don't have 10 years. They know it's going to cost hundreds of millions of dollars to already find something like a Copper Creek. So we believe it will be revalued. We believe projects like Copper Creek, we're currently trading on those historical resource estimates, Matt, 1/2 of 1 penny per established pound in the ground. So there's an 8x differential from what they already understand is roughly the cost to delineate these things. We can also look at the historical, the takeouts that happened in the last 2 cycles. And if you look at 30 different projects, they went from between 3 and 10 cents per established pound in the ground. Call it an average of 4 or 5 cents. There's a 10x of differential once again. And that's before we drill one hole, before we do any kind of updates. We believe Copper Creek has that kind of potential. But as we get further down this cycle, and with Goldman Sachs coming out last week talking about $6.50 a pound copper through 2025, it's a game changer. So I believe just because these projects are trading in 2011, 2010 at a certain value, it would be reasonable if copper surpasses its old all-time high and start talking about having a 5 on the copper price. You're going to see, I think, takeovers surpass that of what we saw in the last 2 cycles.
Okay, and do you think because of your background, you're coming at this different? You're not necessarily pure play explorer, or you're not a developer. You're not going to build this thing out. You're going to spend money in this. I go slightly unconventional way because of your belief of where the copper price is going to go. Do you think you're going to be able to get the most leverage by using this model? In which case, has anyone else done this? Is anyone else doing this? Where can we look to this way of doing things and say, well, that worked?
No, I think what we're doing at CopperBank is a little bit unorthodox. It's rare that you find a group of investors that own this much of a company and they're in it for the equity. I'm not going to be building the Copper Creek complex. This is something for a larger, more mature company to do, which is why they will choose how they will do a feasibility study on the project, but it's pretty well situated. And thinking like an investor, all we care about is to have a share price that is reflective of the future value. And as I gave you various guidance, we're trading at 56 cents a share. And I don't need to raise a boatload of money to answer the unanswered questions. There's $1.50 a share in paid drilling on the portfolio, drilling and test work. The previous market cap high in excess of $3 a share. The cost to delineate these pounds, again, it's over $3 a share. And if you look at the historical transaction value, it would be in that $3 to $5 a share. So we believe that is something that's attainable, and that's what we're striving for, is to basically, the market, I think, will decide where that value will be.
Do you think there's a danger that you're thinking too much like a banker, too much spreadsheet exercise, and not about what's in the ground and how do you best manage that, work that out, prove value through the drill bit?
Well, how do you monetize an asset like this? Our team is 1 degree of separation from anyone who is anyone in copper mining. So there's 2 parts to that. You have to have a relationship with the executives. It doesn't interest me, people that are they think they know everything and they've been to a project 15 years ago and they think they have all the answers. They don't buy copper porphyries. My interest is those 15 CEOs that have larger companies that are looking for growth. And then my technical team, we have relationships with people that work within various groups, and it's about showcasing the potential of the project. These things do not grow on trees. How many billion-ton copper porphyries that are well situated are there in the world that are owned by junior mining companies? Not a lot. We're one of them. And that's also because we're heavily geared to the equity. A lot of times management teams do not own a huge portion of their company. Their wealth is created by taking a salary. So their agenda is a little bit different, I think. It's the golden cow that's what they milk, is the salary, which is why they raise money at any level, on any terms. In the bear market, you can imagine, you've seen this, you've been witness to this. And now there's a bit of payback because it tempers the potential of a share. Of course, the project's important, share structure is important, but it's not just what the share structure is today. What's it going to look like 2 years from now? You have to look at that, the dilution, and what must you do to move your project to the next level. So we're not just sitting on our hands. The team is looking at how to move these projects forward. We're in dialogue with people to continue to showcase what the project is baseline and where it can go. And then we're also I'm dialoguing with people that actually have the potential to move a project like this forward.
Okay, so you, as far as you're concerned, you're targeting 15 odd CEOs and making sure they know where you're at with your project or projects, Contact and Copper Creek. Great. Let's park that up because I'm sure you'll come back on the show, hopefully a bit sooner, and tell us about how that spend is going. Can we talk about some of the? Can we talk about Copper Ridge and Dry Camp, because you've got some other products in the portfolio? Is the idea to, if you can, spin out, sell, whatever, Contact and Copper Creek, and then work up the other portfolio projects and just rinse and repeat, as it were? Or does it all go in one fair shot?
Probably not. I think the where you get your biggest bang for the buck is by having different teams working the various different projects forward. So our project in Nevada, which is called Contact Copper, is a very special opportunity. It's oxide copper, leach copper, which would be a lower capex, a solvent extraction, electrowinning type of operation, where it's cathode on site. This is important because there's no concentrator involved. There's no concentrate. You don't have to ship that out to have it smelted. These cathodes can be shipped directly to fabricators and converted into piping and cable and what have you. This is very important. Now, why is this important? In the world of copper comes from three sources. Primary production, which is concentrate, these cathode oxide type projects, and from scrap copper. So the market is 25 million tons. So for every 4 tons of concentrate, there's approximately 1 ton of scrap copper and 1 ton of cathode copper for that profile. So 60 million tons of concentrate, about 4 million tons of cathodes, and 4 million tons thereabouts of scrap. The production profile of these oxide projects falls off a cliff in this decade. We've simply tapped out these resources, these types of deposits. This was something that was invented in 1968 at the Bluebird mine in Arizona, and it took about 10 years to really get it to work. And it was the low-grade cap of these big sulfide projects. And then they got it to work very efficiently, and there was a huge ramp up in the United States in the 80s and in Chile in the 90s. But now those projects are falling because we have not been able to replace them. Nevada and Contact Copper is exactly this type of deposit. Based on the 2013 pre-feasibility study, the capex was estimated to be $180 million. We believe there's an opportunity to optimize that, so we could do there could be a two-phase development. At this copper price, Matt, they use $3.20 at Contact. When you start to look at $4 and $4.50 without optimization, it's the NPV of the project is 2x the capex. That's a fantastic figure, but it doesn't stop there. The area 1 kilometer to the west of Contact was never drilled. This property was acquired in late 2011 by the previous operator, and the fieldwork they did in the summer of 2012, 1 to 12% copper oxide outcropping at surface, never drilled. This is a kilometer and a half west of the current historical reserves of the 2013 PFS. This is a very exciting drill program. Anything that is delineated there could either be its own project, it could be a satellite pit for that we can put to that optimization, which we look to do at Contact. Do you know how much money it's going to cost me to do this drill program? These are 100-meter holes. About $1 million, Matt. You know how much money it's going to cost me to do the optimization at Contact? About $400,000. So you have a project. If we have success in that drill program, easy to raise more money and keep drilling. We also have the fallback of that optimization, and including they use 35% tax rates. Tax rates are now 21%, maybe going to 28%. There are many areas where we can optimize that project. And I believe because of this profile, the production profile of copper oxide projects, this is going to be for many reasons very desirable. So how will we monetize that? Is it a spin out? Is it a partnership, joint venture? Or is it an out and out sale to a company that wants to develop that project? As you know, it takes 20 years to develop a project from discovery hole to the production decision. This project is 2 or 3 years away, could be if you start executing, from going into a production type decision. This is near the finish line. $40 million has already been spent there, and we believe this is a sleeper in the portfolio of CopperBank by itself would justify the current market cap. So then the rest of the portfolio is something that adds values. Or look at it a different way. If I was to take the various projects and put them in their own listed companies, would their individual market caps be $10 million each? Of course not. That's how the movie ends. And that's where I believe we're going to see this recapture the historical market cap highs of 2011, which would be well in excess of $3 per CopperBank share. And there's not a lot of dilution to get us there.
Okay. That's a lot of information. I think the original question was about what are you doing with the rest of the portfolio? Are you just saying we're going to focus on the 2 projects and then we'll work out maybe some sort of cookie cutter approach to the balance? Is that what you're saying?
Well, let me continue to answer your question, and I can basically pick the different assets on how I'm going to move each asset forward. So I just talked about Contact and the exploration project to the west of Contact. So there's 2 projects that they're currently connected, but they could be separated. And there's many ways that you can monetize that.
Right.
So there's no royalty on that project. So if I'm successful in monetizing it, we would hold that back. And that is, in fact, one of the assets in CopperBank Royalty Corp. Now, if you go back to Arizona, we just talked about the historical resource. It's 1 billion tons. It's one of the biggest copper porphyries in the world. We have a 16 square kilometer package, and the area about 7 kilometers northwest of the historical resource. This is the dry camp area that you're talking about. This is on trend to the Resolution Ray mining complex. And if you look at the 2 major geological trends in Arizona, this is where all the production happens. This was the largest production area of copper in the world until Chile surpassed it. It intersects like this. You got and Copper Creek is exactly at that intersection. This is why there's the highest concentration of these breccia pipes are located at Copper Creek. So this area, 6 or 7 kilometers northwest of the historical resource area, this is a unique exploration project on one of the largest geological trends in the world. And we have competitor activity to our north, Kennecott Copper to our east, and another group to our southeast. This is a very prospective area. The geology is prolific, as encountered with all the different operations within the district. And we're looking at how can we move that project forward. Do we want to allocate some dollars? Would it make sense to drill that with a larger company? Is there some kind of a partnership potential with some of our neighboring companies? That's unique to itself, and it is separate, and that's something that we would look at. And we're very carefully looking at the next steps for that project, but it's something that it could be left in the company. If we are successful in monetizing the larger historical porphyry, do those 2 go together, or could they be separated? And once again, there's a royalty opportunity on both those projects. So if I'm successful at the historical resource area of Copper Creek or at this dry camp area, we would hold back a royalty, and those 2 would complement the CopperBank Royalty Corp.
Okay. Can we just talk about royalties, if you don't mind? What's the game plan with CopperBank Royalties ultimately? Well,
we founded a company. There's the market likes royalty companies. We've seen the Metalla and Nova. It gives us a bit of a baseline. What are they paying for a 0.5% or 1% royalty? What are they worth? And What's the value of a royalty before a major gets involved and after a major gets involved? Well, obviously the value goes higher. What's the value of a royalty on a project that does not have an economic study? And once you do have an economic study, that value is increased. Now, fortunately, we do have historical economic studies for both Contact and Copper Creek. So let me give you some guidance. If we were to attribute a 2% royalty based on the historical PEA, which of course we're not moving that initiative forward, just to give you sort of an idea on that project, if we were to look at just hypothetically, it could be any porphyry. So let's not be Copper Creek specific, but if we were to look at a 75,000 ton a day milling operation, that over the course of 365 days, that would give you about 25 million tons of ore at 0.5% copper is 120, 130,000 tons of metal per year. So that would put out at today's copper price, which is just over $9,000 a ton, that would put out about $1 billion in revenue. Okay, a 2% royalty would be $20 million per year. And the average mine life on such a porphyry would be about 20 years. So that would put out $400 million. Now, of course, you have to put a punitive discount on that. We're not, these projects aren't there, but that you start to capture that value as the project goes down a development arc. So if you were to put a 2% royalty just on moose pasture and they get lucky and have a drill hole, what's that worth? Well, slowly you start to close in that value. As it takes 20 years, once you get to year 15 on the development arc of a project, all of a sudden that's worth a little bit more because maybe you can see the finish line. And it's speaking in 2021, if a project goes into production in 2028 or 2030, you start to close that value. Well, let's not forget, our projects are in fact at year 15. So the next 2 years are very important as the copper price is stronger, as we're able to attract interest from larger partners. Using that example, you go from that $400 million of value, maybe it starts at $1 million, all of a sudden it's real money. And that's why we believe, when we're able to move the project forward and when a larger company gets involved, we want to brand that now. We do, in fact, have a 2% royalty at Copper Creek that we can put on it 1.5%, 2.5% as we desire, and 2% at Contact. Those are the assets. We could float CopperBank Royalty Corp. It wouldn't cost a lot of money, talking about $500,000, and then you would have, because there's no management, there's no team, it's just a small board of directors, and patiently wait. Why would we do that? To stock list and spin out CopperBank Royalty Corp, well, it gives the market a value and people can push that value up or down. If it's cheap, I'd buy a lot of the stock. If it starts to trade and close that gap, we can issue equity to acquire more royalties. That's how we can grow. There are a lot of prospectors out there that have a royalty that maybe they want partial liquidity. They want to be part of something like a royalty company. And it's a little sleeper in the CopperBank portfolio, but I believe it has a lot of potential. And it's just this school bus that's going to drive a lot of value as we go down this development arc.
Okay, I mean, that's
an answer.
Yeah, it was. But it's the bit at the end that I was interested in is what are you planning to do with it? Do you just sit back on your couple of royalties and hopefully over a period of time as an annuity stream for you privately? Or do you play the royalty game, which has been played quite well by a few people in the market at the moment, is go public, you get, whatever multiples you're able to achieve on those, and then go out and buy more. So are you thinking about building a public royalty company off the back of this, small but not insignificant start, or is it something else? And I think you've described what the options are on the table for you. Okay, appreciate that.
Correct. So this is a forward-looking statement. I've had a couple press releases on this. I would say as one option or scenario, we do in fact float CopperBank Royalty Corp. This doesn't cost a lot of money. If that company was to be floated by, let's say CopperBank's share price appreciates, which I believe, I'm an optimist, and I think that we will start to close the gap of the historical market cap highs and where we are today. We would raise more capital, as I've already described, as long as we feel that the dilution warrants the that dilution. People should also know this, just an important caveat. If my share price doesn't appreciate and I want to move my project forward, we have the ability to self-finance. I don't have to go to people that are going to rotate a stock for a warrant. We've demonstrated that in the past. Me and my team, we can raise the $2 million for the phase 1 drilling program. And if you use our historical precedents, every financing was done above the market without a warrant. So it's not just about people waiting on the sidelines for some kind of a, fancy financing that's going to come with a full 5-year warrant. The low probability that happens. But when I raise a little bit extra capital, could be the starter funding for the spin out of CopperBank Royalty Corp. And that would be something that it would have to trade. I think CopperBank would be the largest shareholder of that. We would put a spin out share to our shareholders that would participate in that. And then it would have to trade, and we'll see. If it trades at a low value, I would say that me and my team would be buyers of that equity. If it trades at a high value, it would be less dilutive. We could raise capital. We could also acquire additional royalties. So that would be a plausible outcome, I think, the flotation of CopperBank Royalty Corp under those right circumstances.
Timing for that? When do you make a decision about that?
That's to be determined in the future. That's a forward-looking statement. It's the context of the market, and it's something that we could easily execute because it doesn't cost not a lot of capital, and it's a relatively straightforward decision. We would have to float that by through the board and market sentiment, but that's a future. I can't answer definitively when that would happen, but you'd have to be a shareholder of CopperBank to participate in that, whenever that would be.
Okay. Well, look, Gianni, I appreciate today. One, it's great to catch up with you again. It's been far, far too long, but I like the fact that you've laid out really clearly how you're going to develop things going forward, how your plan of attack, as it were, with regards to CopperBank, and I do appreciate the colour on CopperBank Royalty too. Stay in touch. Let us know how you get on. Interesting project.